Hello folks, this is Don Cloud from Cloud Investments with a July 2017 Educational Economic Update. In this video, we'll talk about some of the economic headlines that influenced markets in June and give you some insight into what they could mean for you as an investor. Please stay tuned at the end for a required disclosure statement. June 30 marked the final trading session not only for the month, but also for the first half of 2017. It's a period marked by strong stock market returns and exceptionally low volatility. Although volatility returned the last week of June, markets alternated between gains and losses, with stocks plunging on 27th and 29th, but surging on the 28th. Despite ongoing conflicts in Washington, Wall Street is still in rally mode. The S&P 500 had its best start since 2013, and NASDAQ marked its strongest first half of the year since 2009. Stocks have been lifted by the sense that other global economies, particularly in Europe, are starting to stabilize. Not all stocks have been rising though. The S&P 500 telecommunications sector, which includes phone and internet providers, as well as the energy sector, including oil and gas companies, are both down. Our economy slowed less in the first quarter than initially anticipated because of unexpectedly high consumer spending and a bigger jump in exports. The U.S. gross domestic product, which is the total value of goods and products and services provided in a country during 1 year, increased at a 1.4% annual rate. It is still the slowest growth rate since the second quarter of 2016. Job growth has been steady, and consumers are feeling better about their ability to pay their bills, take trips, and cover other expenses. Consumer confidence rose in June from May, and experts say conditions are good for economic growth to continue. Americans' personal income soared in June, but that extra cash didn't seem to prompt consumers into spending. Personal consumption expenditures, or PCEs, only gained 0.1% for June, the worst showing since February. Spending rebounded in March and April after starting the year on a soft note, and the latest report suggests consumers are being frugal once again despite pay increases. So, what can we expect from the markets over the next 6 months? Looking into the second half of 2017, analysts believe it's unlikely that low volatility will persist indefinitely. Investors may need to brace for more big swings, up and down, in the coming months. Wall Street will be focused on whether corporate earnings can continue rising at a healthy pace despite what's going on in Washington and around the world. Wall Street professionals say the best days for the stock market this year may have already occurred. What might stall future gains in a market that has become too expensive could be political gridlock, a slow-growing economy, and worries about top-performing stocks cooling off. There's also a feeling that the market's fast start has stolen from gains that might come later in the year. Interestingly, consumer attitude hit its lowest level since November 2016. Economists expect the measure of consumer attitudes to fall even more in the coming months. Consumer attitudes soared in June as U.S. consumer sentiment slid to a 7th-month low. Though still rising slightly above economic expectations and still holding historical highs in the first half of 2017. Well, that's it for the July Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number below. And we'll see you again in August. Here are some upcoming events we'd like you to know about. Social Security Seminar. This will be held at University of Alabama Gadsden, August the 8th and 10th at 6 p.m. Retirement Planning Today. This will be held at UAH Thursday, August the 10th and 17th, or Tuesday, August 15th and 22nd at 6 p.m. Retirement Outlook for 2017. This will be held at Grill 29, August the 29th and 31st at 5:30 p.m. Once again, this is Don Cloud with Cloud Investments signing off for the month of July 2017. Please remember that nothing we talked about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 256-715-0094. We'd be happy to talk to you.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investment advisory services offered through Cloud Investments, LLC, a registered investment advisor in the state of Alabama. Insurance products and services are offered through Cloud Financial Incorporated. Cloud Investments, LLC, and Cloud Financial Incorporated are affiliated companies.